Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with a video about the European ETFs that you can use for making a global portfolio with only one fund. In order to do that, you need of course an overview of all the global funds that are to your availability, and you also need the indexes. So you have the MSCI All Country World Index, ACWI, and not the MSCI World because that's only the developed world. You need to check out the video that I made earlier. I'm going to put the link in the description down below. So if you haven't seen that video yet, you can check that out after watching out this video. Then you have the FTSE All World Index, and you also have the more specific index of the FTSE RAFI All World 3000 Index. For the MSCI ACWI, you have the accumulative funds to your availability of the iShares or the SPDR. So you can see the ISIN code, the total expense ratio, and the number of holdings that those ETFs hold. At the end of the video, I'm also going to give how they performed in the past 1 and 5 years. So you have a total overview. But you know, I'm a channel about dividend investing. So I'm not going to go in depth about the accumulative ETFs that I'm mentioning here. So you also have the distributing ones from WEBG, from Amundi, the Prime All Country World UCITS ETF. So that one is on the SIX and on the Xetra and the GETEX. So unfortunately not on the London Stock Exchange or on the Euronext trading platforms. So it's a bit annoying, but normally when you are able to trade on the Xetra, you are able to buy the WEBG. Then from the FTSE All World Index, we also have two accumulative ETFs, the VWRP from Vanguard and the FWRA from Invesco. So once again, the ISIN code and the total expense ratio are there, and the number of holdings that they hold. And then you have the distributing ETFs, the VWRL, well-known ETF, Vanguard FTSE All World UCITS ETF. And then you have the Invesco counterpart, the FTWD. Unfortunately, that one isn't on the SIX, just like the VWRP, that one is also not on the SIX stock exchange. But it is on the London Stock Exchange, on the Xetra and the GETEX stock market, so there you can buy it for sure. And then you also have VHYL, well known on this channel because that's an ETF that my wife and I always buy in our ETF portfolio, and that's the Vanguard FTSE All World High Dividend Yield UCITS ETF. And then for the FTSE RAFI All World 3000 Index, you only have one distributing ETF, and that's the PSRW. And that's the Invesco FTSE RAFI All World 3000 UCITS ETF. So let's start with the WEBG. It's from the video that I made about the new ETFs on the block on the 6th from a couple of weeks ago, and it's the Amundi Prime All Country World UCITS ETF. Total expense ratio of only 0.07, so it's the cheapest one that I'm going to mention today. And you have one share for 11.54 US dollar. It pays out the dividends in US dollar, and it invests towards 2,319 companies. There is 2 billion invested into this ETF already, and it's a fully replicated type. And yeah, it's not around for over a year, so far it is up 16.20%. It pays out one dividend per year, probably in December, but this year we haven't seen one. I saw the past year in 2024, at the end of the year, we didn't see a dividend, so Amundi still needs to come through with the dividend, and probably then the first dividend will be way too high because it's already more than a year that it's collecting the dividends. and the dividend yield is still a question mark. So everything is empty in this dividend information graph. And if you look at the top 10 holdings, they make up 22.49% of the ETF, and it's the usual suspects, so Nvidia, Apple, Microsoft, Amazon, Meta, because the United States make up 62% of these kind of ETFs, almost always around 60%, and in this case it's 62%. And you also see technology makes up 27.18%. You can freeze the video here or wind back to see all the information of this ETF. Then you have VWRL from Vanguard, the FTSE All World UCITS ETF, and that one has a total expense ratio of 0.22%. You can buy one share for 127.92 Swiss francs right now on the SIX stock exchange, and it pays out its dividend in US dollar. It has 3,597 companies in which it invests its money towards, and there is 14.88 billion Swiss francs invested into this ETF. It's a sampling type, and yeah, the performance is always in US dollar, also from the WEBG. It was the case, everything was in US dollars there for the performance. So this one is up 22.03% in the past year, and in the past 5 years it is up 60%. Pays out quarterly dividends, and the dividend yield is 1.50%. And here you can see that the distribution is quite nice. Only in June it's a bit higher, but I'm not going to complain about that. And once again, Apple, Nvidia, Microsoft, Amazon, the usual suspects. Here it's 60.40% that the United States make up, and the technology sector makes up a little bit less with almost 26%. Then you have FTWD, so not on the SIX. So you can buy it on the GetX for 4.94 euros or on the London Stock Exchange for 5.56 British pounds. And the total expense ratio is 0.15%. The currency of the dividend on the GetX, it's paid out in euros, but on the London Stock Exchange, it's paid out in US dollars. And I'm going to give the dividends in US dollar here, and also the performance in US dollar. And it invests towards 2,396 companies. There is only 62 million Great British pounds invested into this ETF, so it's the smallest ETF that I'm going to mention today. It's a sampling type ETF, and yeah, it's around for over a year and a half now, so I can only give the performance of the past year, and it's up 22.50%, and since its inception it is up 31.55%. Pays out quarterly dividends, and it has a dividend yield of 1.51%, so only 0.01% higher than the VWRL from Vanguard. And here you can see it's the same deal. In June it's paying out a little bit higher than the rest. In fact, it's double, but it's always the case. June it's higher. And here once again, yeah, more or less the same distribution. So usual suspects making up around 22% of the ETF, United States making up 62% of the ETF, and technology making up 26% of the ETF. So then you have VHYL. If you like dividends like me, then the high dividend yield ETF from Vanguard is something for you. The total expense ratio is on the higher hand with 0.29%, and you can buy one share now for 62.14 Swiss francs on the SIX stock market, and it pays out dividends in US dollar. There are 2,116 companies in this ETF, and there is 4.5 billion invested into this ETF, almost 4.5 billion. It's a sampling ETF, and the past year it is up almost 15%, and in the past 5 years it is up 37.16%. It pays out quarterly dividends, and the dividend yield is a little bit higher than double of VWRL, so 3.08%. And here once again, nice distribution, but in June it is higher than for the rest of the quarters. And here the top 10, it's completely different than all the rest that I've shown so far. So here the top 10 only makes up 12.46%, and here you have JP Morgan, ExxonMobil, Home Depot, Procter & Gamble, Johnson & Johnson, AbbVie. So total other distribution of firms in this ETF, and that's what I like about VHYL. Also, the United States make up only 41% of this ETF, and that's something that I like as well. And the financial sector is making up 27.28%. That's something that I don't really like, but yeah, it's always the case when you go for higher dividend yields, then the financial sector is going to increase, of course, so it's no big surprise there. And then you have the last one, the PSRW, and that's the Invesco FTSE RAFI All World 3000 UCITS ETF. And if you wonder what RAFI means, well, RAFI means Research Affiliates Fundamental Index, and this one doesn't follow the market capitalization, but it is using 4 fundamental factors to calculate the composition of the ETF. And the factors that it uses are dividends, cash flows, sales, and book value. So if you are more for fundamental analysis, then maybe this ETF is something for you. The total expense ratio is actually the most expensive one so far, so 0.39%. And you can buy one share on the 6 for $28.62. The dividends are being paid out in US dollars as well, and there are 1,201 companies in this ETF. Only 70 million invested into this ETF, so also on the lower end, just like one of the second one that I mentioned in this video, and it's a sampling ETF. And in the past year, it is up 17.71%, and in the past 5 years, it is up 53.72%. It pays out 4 dividends per year, so quarterly, and the dividend yield is 2.29%. And here, the dividends in March, it is way lower, so the lowest number, then June makes up for that. And if you calculate on average, you get around 0.14 on average every quarter in dividends from this ETF. And here also a different composition of the ETF. So here the top 10 holdings only make up 9% of this ETF. So you have Apple, JP Morgan, ExxonMobil, Microsoft, Berkshire Hathaway, Shell, Amazon. So once again, a completely different composition, and the United States are making up more or less 50% of this ETF, and the financial sector here makes up 23.25%, and the technology sector is 10.42%. I like this ETF quite a lot, but yeah, I'm already investing in VHYL. I can't invest in everything, of course, so I'm going to stick with VHYL and not going to switch to Invesco, although it seems a really attractive ETF. Only the total expense ratio is a bit too high to my liking compared to the other ones. So here is the overview of all the ETFs that I mentioned in this video. And if you look at all the ETFs, you can see that the MSCI ACWI, the WEBG, is in fact the cheapest one with 0.07 total expense ratio. It also has 2,319 companies in it, so that's really nice, but it's still a young ETF, so it hasn't been around for a year, only 10 months so far, so I may almost 11 months, but yeah, it's still a young ETF, so I'm still talking about it with a little bit of caution, but definitely if you look at everything on this ETFs that I mentioned today, WEBG is definitely a great contender. And then you have the FTSE All World ETFs, the VWRP compared to the FWRA, with the total expense ratio being cheaper for Amundi. I know it's the Invesco, so FWRA and FTWD are Invesco ETFs, and yeah, they are cheaper in fact than the Vanguard, and that's not something that you would expect because iShares and Vanguard are always the go-to providers of ETFs in Europe. And yeah, the Spider, Amundi, and Invesco are actually going beyond the bigger suppliers of ETFs here in Europe. So when you look at ETFs, certainly don't forget to also check out other providers like SPDR, Amundi, and Invesco. With Amundi, you have to be careful, and Invesco as well, because you have a lot of swap-based ETFs hanging around. So only go for the sampling ETFs or the fully replicated types, so that you are on the safer side, that you truly invest in what you think you are investing. And the FTSE RAFI All World, the PSRW, it's also an interesting one, but it has also the highest total exchange ratio. So with that being said, I thank you for watching to this one and see you on the next video on my YouTube channel. Bye!